China was the dirtiest miner of Bitcoin. The next FUD is China might take it over. That's not happening. The next FUD was they dominate mining. That's not happening. The next FUD was it's a secret to undermine the dollar by the Chinese. That's obviously not the case. Well, we think the primary dynamic is the China exodus. There's a forced and there's a rushed exodus of capital and mining from China that was a bit of a surprise that kicked off in May. And that's driving the dynamic in the market right now. The big FUD in the market was, oh yeah, Bitcoin is dirty. Well, 75% of the power in China was coal. So China was the dirtiest miner of Bitcoin. The next FUD is China might take it over. That's not happening. The next FUD was they dominate mining. That's not happening. The next FUD was it's a secret to undermine the dollar by the Chinese. That's obviously not the case. So now that you're through the China FUD and you're through all the Bitcoin is China coin type ridiculous narrative, now the next question is, well, is Bitcoin good for the world? Well, it's good for the rest of the world, right? It's good for the dollar. What you can see here is that if you're free floating currency, then you're going to see the US dollar float to 5 billion people's mobile devices, and Bitcoin is going to be the underlying protocol to synchronize all 5 billion devices. And if you don't synchronize on Bitcoin as a settlement network, you'll synchronize on Lightning as a transaction network, or you'll synchronize on another layer 2, a proprietary layer 2 controlled by Binance or Coinbase or Square or PayPal or Apple or Google or Facebook, that then in turn settles on the underlying Bitcoin settlement network. And so the architecture of the world is becoming clear. And Scott, you know, when I wrote the book, The Mobile Wave, what I said was, I don't think the price, the mining is really driving the price. I think what's driving the price is to crack down on over-the-counter trading. I think it's more of a capital control that the Chinese are putting in place. And so anyone holding Bitcoin had to sell the Bitcoin to convert it back into RMB. I think that rushed, forced exodus of capital is what's driving the price. I think it's got to work its way out of the system, and I think we're getting toward the end of that. We'll see. There might be a little bit more in the system, but once that forced selling is through the system, then I think we're based for advances from that point forward. Buy Apple, Amazon, Facebook, and Google because they're the dominant digital networks in the Western world. China closed off China to Google and Facebook and Twitter and Amazon and the like through capital controls and information controls. And then they created their own version, Alibaba, WeChat, right? Alipay, right? So Weibo. So China created its own little world. And what you saw was the Westernet, which consists of Western Europe, the United States, the rest of the world, that became one ecosystem. China, with their billion people, became the other ecosystem. And then you saw the category champions in both ecosystems. But ultimately, you know, I would rather own Google than own the equivalent in China, especially because at least Google gives you right to property, which you can take to Sicily or Paris or London, and you can live in a free economy. Whereas if you've got all your wealth and your business trapped in China, it's a closed system. You have to stay within China. You don't have access to the rest of the world with it. You can't take your capital. And so ultimately, they close themselves off.
Other thing that's happening, aside of course, the crackdown in terms of cleaning up the system in China, is cracking down on mining activity. And so, to your point, that migration is happening to the US. I wonder how much of that has played out and how much more is there to go for the market to rebase itself.
The network peaked at 180 exahash about a month ago, and it's down to about 100 now. So we've seen about 40% of the network get turned off. I think that it'll take 12 months to try to turn that back on again. But Again, the network's perfectly secure. It's very anti-fragile. The mining activity has shifted to North America, Europe, and other parts of the world. What's really happening here is an exodus of capital from China. The miners have to sell Bitcoin in order to finance their exodus. The holders of Bitcoin in China have to sell the Bitcoin. Their financiers are selling the Bitcoin. So it's kind of a forced government-driven liquidation of the asset from the east to the west. Western buyers are getting a bargain. My company bought $489 million worth of Bitcoin, around $37,000 a coin. If this had not happened, we would have had to pay double. Well, we think the primary dynamic is the China exodus. There's a forced and there's a rushed exodus of capital and mining from China that was a bit of a surprise that kicked off in May. And that's driving the dynamic in the market right now. A Bitcoin industry is using more sustainable energy than any other industry, and it's getting more sustainable at a more rapid rate. So we look forward to sharing some of those findings shortly with the public. Well, China had 50% market share of Bitcoin, and they were generating $10 billion a year in a business that was growing 100% a year over year. And the government cracked down on it, and they squeezed the entire industry out of China. I think that given the growth rate of Bitcoin, this will prove to be $1 trillion mistake for China. So it's a tragedy for Chinese miners. It's a geopolitical mistake for China, the country, but I suppose they can afford to make $1 trillion mistake. It's a nuisance and a dislocation for Bitcoin in the near term. You see the trading volatility. It squeezed a lot of people a lot of Chinese had to sell Bitcoin and under forcible liquidations with a time frame because they have to get out of the country and all their loans got called. And so that's been a big opportunity for Western investors. Companies like mine bought Bitcoin in the 30,000 range. We would have paid double, maybe triple to buy the Bitcoin if it hadn't been for the China exodus. So we got a benefit from that. And it's a great windfall, Emily, for North American Bitcoin miners because their costs are the same and they're going to generate 50% more revenue or 75% more revenue for quite a while because the Chinese industry has been taken offline. Buy Apple, Amazon, Facebook, and Google because they're the dominant digital networks in the Western world. Western buyers are getting a bargain. My company bought $489 million worth of Bitcoin. The Bitcoin industry is using more sustainable energy than any other industry, and it's getting more sustainable at a more rapid rate. Companies like mine bought Bitcoin in the 30,000 range. We would have paid double, maybe triple to buy the Bitcoin if it hadn't been for the China exodus.